Or coming to class and you get everything that's going on, you won't know for sure until you actually apply it and do homework. I cannot stress enough how important doing homework problems is for enhancing your understanding of accounting. So homework is absolutely mandatory. So there is a homework system. You go in, you sign up for the website, and you do the homework online. They give you immediate feedback. I'm trying to help you learn here so you can take as many attempts as possible. You know, I give you the best scores you can get. I'm not trying to make your scores worse. I'm just trying to get you to really work through problems. Now, that costs, I don't know, I think like $80. There are lots of different alternatives for doing it. So you can just go and buy that. Or you can go online and buy that plus an online textbook. Or you can buy the whole package, which is like a real copy of the textbook and the online homework. The copy of the textbook, the good news is you do use it for the next semester, so you get 2 uses out of it. The bad news is it's crazy, crazy expensive. So if you find that prospect intimidating, here's a suggestion. Now, I probably should not take this, but okay. The suggestion is intermediate textbooks change over time as accounting rules change. But the accounting rules don't change all that much, okay? And the textbooks get really, really expensive, but the old versions are really, really cheap. So if you buy the online manager, you find that it would be helpful to have a physical textbook. Go on eBay, go on Amazon, buy a used copy of the last edition for $5 and see if that works for you. Okay? You didn't hear from me. You didn't hear from me. So that's what I suggest. Okay? And all of the different options. Having the intermediate textbook will never hurt. You're going to need it. You're going to study for the CPA for it. You're going to want it. But if you're resource constrained, like most of us, you might think about other options. Okay. The second and another important thing is I am hoping to change this classroom. Okay? Not that this is a bad room or anything, but it doesn't really suit my needs. I like to write on the screen using a smartphone. So I'm hoping we can change to room 508. If anybody has any physical reason we need to stay in this room, please let me know as soon as possible. Okay, so if there's some reason that you need to stay in this room, then let me know. Otherwise, I'm planning on having this whole section move up to 508. Okay, that's the other thing. Those are the mundane, boring things. Okay, now before we talk about stuff, I want to ask you guys, you're all majors, right? You're all accounting majors. Why are you taking, why are you accounting majors? Well, you don't have to, they don't have to be good answers. see. All right? Right. Yeah. Okay, so I like that one. What else? You can be kind of petty. You can say, like, I was told you get a hot-paying job. That's fine. Or at least, hey, I get a job. So what else? Come on, throw them out here. Yeah. Okay, so people need accountants. No matter how the economy is doing. In economics language, we would say this is a non-cyclical industry. So no matter what's going on, we always need accountants, right? Even if you're doing badly, you still need audited financial statements. If you're doing well, you need audited financial statements. They're always hiring CPAs or emerging CPAs, students with the sufficient credentials to become a CPA. So, it's kind of a sure thing. And if you want to actually have a job, it's a good choice. Okay, what else? Anything? Okay. Suppose you were all pre-med, and I was your first after teaching you something about, talking to you about. I just want to get more light up here. Okay, and I was talking to you about getting into the medical profession. What are some answers you might see there that we don't have up here? Like, why do you want to be a doctor? What might you see up there? I want to help people. Okay. What else? What? I'm good at science. Okay, so the money is really good. Okay, I'm good at science. What else? Satisfaction. I get personal satisfaction out of it. Meaning the job is challenging, or I just like helping people? Okay, so helping people not only helps people in an abstract way, but it also helps me feel better about myself. Okay. So, anything else? Okay, so that could apply for my parents are accountants too. You always need doctors. People are always going to get sick, at least as far as we can see in the short term, until we become robotic and we get all this cool stuff. Okay. Yeah, people. So those would be this might be true here and here. Okay, so I hope you will believe that this belongs in our section too. Okay. I know you're going to go to really. Without accountants, the economy is in the toilet. Okay, you cannot get the world to function without information and without systematically well-prepared financial information. Think about the financial crisis a couple of years ago. People are like, oh my God, we didn't know. Why didn't you know? Well, because the information system was inferior and unable to deal with problems that were, or the sort of reporting issues that were coming about. We didn't have the information that we needed. Using the information that we provided in order to make good decisions. It's not sort of just, we're helping people make good decisions. If the economy doesn't do well, what happens? People are unemployed. People are unemployed. They don't have any money. If they don't have money, they're hungry. We help people get jobs. Okay, it's not, I don't mean it in a sort of ridiculous, there is a need for our jobs. We don't have to be embarrassed. What are it's not, because people sort of, oh, yeah, that's a loser, boring job. the stereotype of, wearing the paper on your lap. Right? Okay. You can be a sexy accountant. Like, in the last 10, 15 years, people have recognized the importance of becoming much more than ever before. And we're trying to help people understand how important accounting is in a well-functioning economy. So it's not just about, I'm good at numbers or I want a job. It's without accounting, the economy is absolutely, we need systematic financial reporting for the economy to work. Okay, so I've told you on. Well, you're already told, right? I have a captive audience. You're already all majors and you're pretty committed, but okay, I need the other display on. Okay, so I hope I mentioned that my name is Carolyn. I am. We have a CA my office hours, his office hours, and our locations are all located on the floor. Everything you need without me. That was in the syllabus. Okay, I didn't give this out just because it's kind of like, something that I'm required to do. I gave out the whole course laid out right there. So if you say to me the day before an exam, I didn't realize we had an exam tomorrow, I don't have a huge amount of sympathy for that because I told you that on day one. So please, keep it there, right there, keep it in mind. I do not expect you to let me know every single time something cool happens, but I expect you to be here every day. I expect you to be here every day, ready for class, which means to do whatever's required beforehand to get here. And most there is one day where you cannot miss under any circumstances, and that is the day that we have the CFO Audible, which is right above us, coming to talk to our class. That is, I believe, March 6th. Okay? So Bill Mitchell is CFO of a major corporation. Amazon is a wholly owned, Audible.com is a wholly owned subsidiary of Amazon. Okay, he's a guy you kind of want to get to know because the money's really good part also belongs here if you can transition from being a CPA to being a CFO. And then all of a sudden, and being a partner at an accounting firm doesn't really hurt. It isn't a chatty high. So, I just want you to be aware that that lecture I expect everyone to hear and I expect everyone to participate. No question. I would like you to participate all the time. Okay? I'd like you to raise your hand when you know the answer. Should I call on you? If I get nothing, I might just call on you anyway. So let's not get to that point because I don't like cold calls and call on people. So just participate as much as you can. And we'll just take it from there. So that's their homework. Here's the syllabus, the lectures, what you need to read. Okay. So, how many, most of you are probably too young. Anybody remember the company called Crazy Eddie? Okay. Well, I just display it. Okay, so Crazy Eddie. Now, remember, in the old there were no companies like Best Buy or Social Media or anyway, but no company like that. There was no internet shop. There were some that people did when they wanted to buy an appliance. They would see it, okay? Or they would go to a department store. So Crazy Eddie was a local company in the tri-state area which sold exclusively electronics stuff. And they sold it in a very different way from the department store experience. So it was sort of the first move towards a big box store experience kind of stuff that you walk in and it's like this, sort of dirty here, but the prices were really good. So people thought, well, I don't need a fancy guy, he was a great pitch. I mean, he wasn't a person, he wasn't any person. He was just, they had this really good marketing campaign, and it was like a handheld camera, and he would get in your face and be like, our prices are insane. I think if you go on YouTube, you can find it. And what you could do is you could bring in an ad from anywhere, and they would promise to beat it by some amount. Okay, so you were guaranteed pretty much. Right. Okay, so it started out as a family-run business. Okay, bunch of people initially got along with each other, and they were not so incredibly smart. So they would think about mechanisms or ways that they could avoid paying taxes. So how do you avoid paying taxes? Well, you report less income than you generally have. That's one. And the second way is if you own a business, some of the taxes you have to pay are including payroll tax. So you either hire people that are not legal and pay them off the books what possible, or you pay your employees cash so that there's a very good record of their employment afterwards, and so you just don't have to pay as much employment taxes, security taxes, medical taxes, and any of that. Plus, you don't have to issue money with make sales that are not recorded. You avoid paying income tax. Okay? I am not advocating doing this. This is bad stuff. Don't do it. But this is people that are trying to avoid their taxes. Think about doing it. Okay? Now, how did they do it? Well, what they did was each year they would give on some of the income from their sales. And give from their sales. First off, somebody buys a couple things, and you say, well, okay, I'm not drop another $50 off the price. You pay cash for it. Then instead of writing it up in the correct invoice and putting it into the cash register, you just have an adding machine on the side that has no record keeping. Okay, you have a separate invoice book, which is an invoice book, and you write up the sale there, and you say, nice doing business with you, and that never gets recorded because it's not part of the normal reporting. Now, of course, you're missing the inventory, so it's a cost. So basically, you have a cost in the perspective of your tax reporting, which produces your income. You never record the sale, which further reduces your income, so you get a lot of money back by doing it. Have you ever been to one of those courts or places where they say if you don't get a receipt, you get $1 back? Why do they do that? They're trying to prevent the employees from saying, oh, you got $5, sticking it in their pocket, and then voiding it out before they actually report it in the register. And on a grander scale, same creepy, non-brand behavior. Okay? So then they sent one of the cousins in this family to get an MBA. He said, pretty well, but maybe if you got an education, you could learn even more skills. You even better. So Sam comes back after getting his MBA, and he says, well, the real way to make money is not to just skim off the top. The real way to make money is everybody, any company that's really successful sells its shares, and we as investors sell out and make a giant bundle. That's really how you make money. So they thought, all right, well, public, all of a sudden, the requirements on us are going to change. Well, we're going to have to report information to our investors, and those investors are going to want us to keep the profit. Right? How are we going to get people to buy our company? Or if you're willing to buy the shares of Great Gift. I hope, I'm not guaranteeing anything, right? I'm hoping, based on their business model, that they're going to make some money. How would I know if they're going to make any money? Yep. Okay, so I need to look at their financial report. Now, if I were a private company buying another private company, I could get access maybe directly from a spreadsheet. But now, if I'm trying to get an investing company, to buy shares, I need to issue financial reports. Okay? advertising, marketing. You probably have taken some classes where they told you how to, ways in which you might be producing sales. It's easy. I don't see advertise. No. If it was low-hanging fruit, you would have done it already, right? If you could have just opened another store, 2 miles away and gotten way too much business, you would have done it already. So, it's tough. You have to make more sales. It's hard. So it's easier to steal from your company. Okay? So, they looked at this guy, he got an MBA, and he said, well, look, if we have low sales growth, showing historically, then, people are going to figure out a price for us, and it's going to be low. But if we have high sales growth, assume a similar pattern in the future, they're going to give us a higher price. And we can, get another $10, $11 per share. So we want to show high sales growth. So they came up with what they called the 2-1 plan. So they said, okay, in the first year, we steal like we've been doing before, $3 million. It's not literally stealing the money, it's just taking the money off and not reporting. Now they own the company, so it's not, it sounds like it is stealing from the government. It's not that they're all okay, but so therefore steal in terms of report $3 million less than they do. And then the second year they'll only steal $2 million. So an extra $1 million looks like sales growth, when in fact it's the same sales all along. Now reporting, okay? And then the last year, to steal $1 million. Okay? And the company up here high growth. So look at what happens, right? So they 3 to 1 in a rounded way. So they stole $2.5 million, $1.5 million, and $0.75 million from the company. Now, I agree, these numbers seem very small. It's like 35 years ago. A lot. Okay? So if you look at what they would report in the first year, they would report $2.3 million when their income was really 4.8, or 2.3 plus. Okay. Then the next year, they're taking another $1 million and basically putting it back into the company. They're also having some genuine intrinsic sales growth, but it's very small. So their real sales growth is 2%, but by stealing less, they report a 32% sales growth. Okay, same thing for the following year. They steal another $1 million less. Okay, their real sales growth was 8.4%, and they showed sales growth of 26%. So I'm an investor looking at this great company. They have so much opportunity to grow. They can build on it. This is a great business model. I love it. I'm gonna pay a lot of money for this. Well, okay, but it's all big loss, right? That's the problem. So they have to. Lots of investors were willing to do that. They only got really, really wealthy. What's the problem? You steal 3, you steal 2, you steal 1. They can't steal money anymore. So they don't steal money from the company. What can happen? How do you think that investors that invested under the presumption of 32 to 26% growth per year all of a sudden getting 2 to 5%? Happy, right? You're going to be like, so we couldn't keep the cost down, right? You couldn't kind of keep that high level of sales growth by now correctly reporting. Now they have to get through water. They start expanding, and as you're making a lot of fixed costs. So even if you were making more sales, you have also jacked up your other real costs. And then, of course, the house of cards fall down because you have one bad apple, one family member. I'll do that, and I'm telling you. So a lot of investors great meeting, and they, told the SEC, hey, we believe that these financial statements that we were presented with were accurate. We believe it was fraud. So the did ask what's been in the country. Avoid imprisonment, there was actually life in prison, and there's a really cool interview with the guy who's afterwards. He's not really remorseful, but he's kind of pulled over the crank now, you know, where he's like now going to advise people on how to find fraud and fraud guys. But what are the lessons? So the lessons are like kind of when I said, you know, moving this over. I don't know if they're really cool guys, but tell people like people use numbers to really use them to use them real position. If you invest in one company, you don't have to invest in another. Okay? So the economy changes in a very significant way if you invest in jobs. Okay? You invest in bad companies, not in good companies. Good companies die out, they don't actually produce. Bad companies have nothing going, and they, you know, it's a bad thing. Okay? On the other hand, you've got to be aware as an accountant that people you're working for are not going to work. And why do they want to laugh? Well, they want to make more money. You need to be aware of that, and you need to always question. You need to be skeptical. You need to ask, hey, is this really what happened? And you need to check, you know, all around. Okay? Did you really get there? Do you really have to? You have all these receivable things, and that's what your job is going to be. You're the watchdog for the investment public. That's what you're going to be. So it is your responsibility to integrity of the information. Now, sometimes you'll be a scapegoat and say, oh, well, the accountant's finding fraud. That's not your job. Your job is not to find everything that's wrong. Your job is to check and be careful to ensure that the company is doing as much right as they can. All right, so what are we going to do in this class versus what have we done? Okay. You already have keeping skills, debits and credit. Obviously, we need to have a common language and a shorthand for communicating lots of transactions. So basically what debits and credits do is they take a big long sentence of activities and you make it simply into a couple of words and one number. And then you take all that information and aggregate it, and you can give people 5 pages of information instead of 6,000 people. That's not helpful, right? So accounting has to take the information that's been given and distill it into a meaningful, synthesized financial report. Okay? We are then going to prepare financial statements for the purpose of use by external parties. Okay, so this class, we're not really interested in what kind of information would managers want, what kind of information would you want if you were a division level and versus a CEO. We're not really interested. We are interested in, suppose you're the investing public and you don't have access to the book, you can't choose, they can choose what you want to know, what kind of information is required of the company. We are not going to talk very much about auditing, although every now and again also mention ways in which the audit process enters into this, you know, the preparation. But, you know, auditing is basically, you know, technique, investment text, accuracy, and fairness of presentation of the reports that are prepared by. And then tax accounting, never talk about taxes. Every couple of times I have to because there's some important decisions they have to make that affect both reports and taxes. But in the U.S., we are allowed to have a different set of accounting rules as tax rules, and so you don't have to follow the same rules for reporting taxes and for income. And then we're not doing anything that is okay, so we're not interested in trying to figure out what people are using inside a corporation. Okay, so I think I've said everything that on this slide. You didn't go to Blackboard yet. All of my lecture notes are on Blackboard. Okay, they're on Blackboard. This is my class. Okay. talk about the balance sheet in chapter 3, by chapter 10. I'm not going to, I can still ask you questions like, how does this affect the balance sheet? However, I might not say, here a balance sheet from scratch by the time we get to read it. Okay? And I will be grading your presentation during the guest lecture. I will not otherwise be grading your presentation. But during the guest lecture, we can take it really important that show Bill that it makes sense for him to come back here. He's taking a day out of his busy schedule to actually show up here. I'll expect to be here and so that's what's last year we had lots of stuff. Okay, this year I don't look like it, but things change a lot. If there's ever a snow day, we'll just play it by ear and it's very short schedule. I don't have a contingency plan now. If you don't have a line, there is no line. There's 3 midterms. They're all equal, and they're all basically based on 3 chapters. But accounting in general is short too. You can't, like I can't say, forget about key accounts under this one. I'm okay with you using laptops in class if you're using them for class. I know I personally have the tendency when I'm sitting in a seminar with my laptop to screw around and not pay attention. So you are your own disciplinary device. I'm not going to sit there and ask you what to do. During exams, okay, everyone should have a calculator, pencil, and I let you bring in cheat sheet, paper notes, handwritten, or typed up, whatever, front and back, so that you don't have to memorize. Okay, so that's, yes. Textbook never needed during class. If I'm going to do a problem tough text, I'll just have it up in flag, so you don't lug it around in the If you buy a brand new copy of the text, it will come with the memorial access. If you buy a used copy of the text, I'm not sure. And if you buy a used copy from the bookstore, it's expensive and it may not come, and you still have to buy both. So you have to look into that. You need the access code. You can no. So if you buy access, there are 2 levels of pricing, one with an ebook, one without. Other questions? I don't know. I don't know how crowded it is. This class has a bunch of seats. That really wants to blow. So it turns out like if there's a problem, you can't make it in one class or the other. It could be an exception to the rule, and I'm not going to keep it out. But clearly they have priority on physical investment plan? Should I buy the stock? Should I sell the stock? Should I lend money to the company? Should I invest? Those are the kinds of questions I'm trying to help you answer. I'm going to help you answer, like, the CEO has, the other third one. So that's, who cares, right? That's not relevant. We want to know, what do we want to know if I'm an investor, I'm thinking about, should I buy stock, should I lend to this company? What stuff do I want to know? Well, I want to know how much money they're going to make, when it's going to make them, when they're going to make their money, how likely it is, or how uncertain it is that they're going to make their money. So it could be the case that you say, okay, well, this company's probably going to earn, $100,000, but there's a 50-50 chance that it'll go back. Like, I need to know that, right? If I'm thinking about lending to this company, I want to know. 50-50 chance I'm not going to collect anything, okay? So I want to know how much they're going to make, when they're going to make, when I can expect to see that money, and how likely. I also want to know what the company is sitting on right now, meaning what assets they have, what resources they have, who has other claims to those resources. If I'm lending the money that they already have, if I have other loans, then even if they're very likely to make money in the future, I need to make sure they make enough to cover all of those loans, not just my loans. Okay? I need to know how the ownership structure changes over time. So who's providing the resources to the company? Okay? And what's happening from year to year to change how much we have and how they're working. So those are those things that an investor would know. Who are these investors we're talking about? Well, first off, creditors. So people that lend money to companies, and suppliers, people that sell stuff to the company. Why am I lumping creditors and suppliers together? Okay, so usually when you're a supplier and you're doing business with another business, they don't pay you up front, they pay you 30 days later, or maybe 60 days later. You want to make sure they can actually pay you. You're going to ship them a bunch of stuff. Am I going to get paid? Similarly, as a creditor, you're probably lending the money for a longer horizon, 5 years. In 5 years, is this company going to be able to pay me debt? So I want to know whether we should, what the details of our contract. Now, if I'm a supplier and I think the company isn't going to make it past 1 month, what would I do? What are my options? One, not sell to them. What's the other option? Okay, demand they pay me up front. Okay, that just changes the dynamic of the contract I require. On the other hand, if it's a great company, I may offer them a good term. I say, don't worry about it, pay me in 6 months. Why am I doing that? Well, I think if I give them good terms, they'll buy more from me. Okay? That's something I want to know. I want to know about their credit risk because I want to know how to structure my contract. And what about shareholders and directors? Well, directors are supposed to be, and I say supposed to be because that's not concerned that they don't always do this, but they're supposed to be working on behalf of the shareholders. And the shareholders are you guys, regular people who don't work for the company. Now, there are some shareholders that generally there are sometimes when you as a customer care very much about the success of the company. Now, people like if you're buying 20,000 icons, that's just selling icons is another great thing. So sometimes, well, then you need to know how good is this my supplier's ability to provide, because I'm counting on them to provide me the goods when I need them. So I care. Same with strategic partners. I use your product in my product. You need to know it's going to be there. Otherwise, I'll do the partnership with someone else. Why can't I buy it? And then regulators need to know that you're doing what are we doing? Two companies want to merge. I need to figure out if there's going to change the dynamic of the industry. Or not. Are you talking to someone who you take it into? And should we change the rules? And so those are the things that we Okay, so there are some rules in which are called antitrust rules, which say we want to have a competitive environment. If there's only one company providing goods and services, right? It's sort of indiscriminate, and that's not good for investors. So we will try and regulate in a way where one company getting too big so that it owns the entire market. Okay? So it's sort of in like an outlet effect, right? So we're trying to avoid there being one big company. So when does it come into play? When airlines are merging, right? Lots of airlines are merging. Well, the more airlines merge, the fewer choices any individual has. So if you want to leave out of Newark, there may only be 2 airlines flying out of Newark if they all merge with each other. And then how expensive do you think the flights are going to be out of Newark? Well, they're going to go way up. It just becomes prohibitively expensive. So they sometimes call that mergers between place. It will destroy the competitive. Or if there are 2 competing firms, they're both going to moderate their prices. You don't got a whole lot going for you on the GP might sue you after the fact. And the other thing is, if I tell you what a good company I am or what a good employer I am, you want to work for me, right? There are lots of, maybe there are other competitors who might do work for them. But I told you that my friend, I don't think it's my friend, and I'm not such a great employee, then you won't work for me. So let's be close about that. It might just be for a company, preparing the information, getting it out there is expensive. If I tell everybody how good I am, then maybe other companies will want to come and get into the same place. Right? So you know how successful Apple is with iPod. There's a lot of Me-Too's out there. Like, who doesn't want to also make, iPad also? Okay. And so I might put myself in a competitive disadvantage by sharing how great I am. I also might increase, like if I say nothing, you can't hold me to high standards. But if I say nothing and I'm bad, you could sue me for withholding information. Right? So that would be a problem. Withholding or not withholding. And then it could be, again, back to the idea of you don't want to speak too tough. So think about like maybe 5 years ago when Texas was really, really at some point they were bigger than in terms of sales and volume, and it's just because it was during the oil crisis. You don't really want to advertise that. People are really, really, really unhappy when they go to the gas tank every time. All of a sudden, gas went to $1, $3.50 a gallon. You really can't do it. You want to tell them, hey, Exxon, we're great. We're doing so well this year. You kind of want to shut your mouth and side out the way the high profits you have. So there's sort of pros and cons of disclosing, and ultimately, accountants have decided, or the financial accountants have the board says, we need to set some rules. Yeah, companies might go voluntarily, but they might not. So we need to probably have it. Okay. Last thing, a lot of times people think what we do is kind of dull. And that's because they think it's just like, everything's so obvious. I'll tell you what happened. But accounting is pretty hard because we don't know a lot of the stuff we're trying to miss. Okay, so, anyone here have a car? So, what's that car? There we go. We're going to get some specs down here. We got a Civic. 1993. What color is it? Color. Oh, color. Okay, mileage, you don't know? You know the mileage approximately. Let's say 192,000 miles. Anything else? Anyone else have any information? Automatic? Okay. All right. I don't know if anything else. How much is that cost? How much is the warranty here? How much is the warranty here? Like, a lot, right? You can't get to work, to school, to whatever without it. It's worth a lot to her. Okay, how much is it worth to me? Well, not so much, right? Because I have a lot. What? I was supposed to play devil's advocate. Do I care that it's maroon or not? No, probably not that much, right? Maybe that's something, but I definitely care about this. I care about this. Do you have a good idea of how much it's worth? How would I figure out how much it's worth? Sorry? Okay, so I could figure out how much it costs, and figure out how much yeah. Okay, so how do I do that? Where do I go for that? Okay, so there's a whole bunch of cars. The used cars make a pretty efficient, right? Lots of people sell cars. So there's blue books and, all kinds of other techniques for figuring out what a car is worth. Okay, so we could ask ourselves, well, how much is it worth to somebody who hasn't used it and uses it? That may be very different from how much she would have to pay if she went and bought a new one just like it. Not a the same car with the same characteristics, what's the difference? Because she has to buy it. That might be different from how much it's worth to her. It might be different from how much she has when she was rich. If she sold it, okay, and you have to sell it, like, oh my gosh, if I don't sell it by the time I leave, someone's going to break my kneecap, versus I'll sell it when I get a good deal. Those are two different values. How much your insurance is reporting it at, the cost. Those are all different numbers. What do we pick? If I own a car and I want to tell you how much I'm worth, which of these numbers would right to you? Why? Okay, so, yeah. Okay, so the answer is, we don't have a good answer. It's not like this is so obvious. And we are pretty good at measuring the value of cars because they're always being traded. What if a company headquarters built it? They bought it 25 years ago. They haven't sold it. Nobody sold it. It's totally unique. There aren't like 17 different headquarters in the same location. There's just one because it's right there. How do you measure the value of that thing? Okay? So the problem is people seem to think that it's so easy and obvious. And the answer is it's not. We have to come up with an explicit set of rules that say, this is how you measure this. It may not always be the right measurement for the right person. We have to use the same measurement for everyone. And we just said some people would like one measurement, other people would like another measurement. If you're trying to like grab this, with how lucky you are, my car's worth $5 million. That would be a little sure. But if you're going to go talk to the IRS agent, I don't need much less. But, you know, you have totally different incentives, okay? So, you know, it's not that accountants are bad at their job, but it's a hard problem. Like, we don't really have a good answer. So, some people are kind of walking up or doing just counting things and being really nitpicky. And other people think we're crooks. Like, we're kind of estimating things incorrectly when we know the right answer. Neither of those is true. Maybe yes, there are bad numbers out there, and yes, there are nitpicky ones. But our job is hard. Okay? Your job, whatever you learn over the course of your education, apply that's your expertise. That's what you have that all these other people don't. Take your experience, your better network stuff. Okay? So this is just sort of like straightforward. You know, we don't have an answer to the big question, what's the value? We decided at some point to make a set of rules, which is just pretty rough here. So in the beginning, the Great Depression, 29, there was a huge market crash, and so we decided we need more regulation. One of the things that happened was the SEC was created, and the SEC was responsible for creating a set of rules which say, this is what companies must do. The SEC is not really a bunch of accountants, they're a bunch of lawyers primarily, so they outsourced the job to accountants who know more about accounting than they do. And so in 1992, there was a straightforward accounting organization, but in 72, the most recent one was created, which is and it has a bunch of different types of members. They all are supposedly independent, and they are supposed to be working in the best interest of the consumers or of the public, but the SEC, every now and then, their policy. So the fact is, this will be accountants do, and the SEC will be like, yeah, but we don't agree because we're technically lawyers. Okay. Now, you may be asking, are we problem is we like U.S. likes to make rules, and we accept the international rules. We have like one member versus dictating the rules, which is all of our rules. So, I'll let you know. People will tell you, oh, the exception rules are so different. Well, they're not. They're almost exactly the same. Fundamentally, the principles and the concepts of the thing. What I teach you in this class, yeah, everything's slightly changes when you get out there and practice, but fundamentally, it's basic to the same. And when I can, I'll try and point out the differences. You don't have to feel like what you're learning is really outdated in 2 years. What you're learning may or may not be somewhat effective, but the ISB is a factor, not a fact. Okay, so this is just stuff that, so let me ask you a couple questions, make sure you're up to speed, and then I'll let you go for today. Oh, and then, so, okay, I go right here, there are 10 days that I recording, and somebody who works with Sarah really likes me. I don't show up, like, I don't do anything special, she just really likes me, gives me free stuff all the time. Now, in the last 5 years, I have gained 50 pounds. I don't want any more free stuff, okay? Because I will look like I just ate all the free stuff. So, whenever possible, I will bring you some free stuff. So it's like I get one thing a day, though, free stuff. So I have a bucket for whoever wants to be the person who answers these 2 questions. Okay, so who wants to be the volunteer today for the free muffin? The free Zaro's muffin. Somebody take the muffin. I will eat the muffin. I don't want to eat the muffin. Anyone? All right, we got a muffin. Okay. What is the major objective of general purpose financial reporting? Are we trying to provide information to managers in making decisions? Are we trying to provide information that's non-financial in nature? Are we trying to provide information that's useful to assess the amount, timing, and uncertainty of prospective cash receipts? Or are we trying to provide information that does not include information about resources? Do we care about management? What do we care about? External users. Okay, the muffin is still up for grabs. Number 2 for the muffin. Okay. Number 2 for the muffin. Common set of accounting standards and procedures. Do we call that financial accounting standards, generally accepted accounting principles, objectives of financial reporting, or standards of financial accounting concepts? Yes. Oh man, it's the muffin! Okay, get rid of the muffin. So the financial accounting standards are the set of rules that are the actual, so there are standards which we create, but the principles are the common set of standards and procedures and so standards are a subset of generally accepted accounting principles, which are what is created by the Fed. Right, no treats today, but next class you get 2 treats. She gave me a muffin. I know, or whatever, I don't know, Danish. Well, if I offer the Danish, I don't even know what it is. I don't know what it is anymore, so it's been on me. Okay. Well, see you next time in class, and on Thursday. Okay.
I guess